Hi, this is Cindy Presgraves with Cindy's Realty Group by EXP. And today I want to talk to you guys about how a change in mortgage rate impacts your home buying budget. Sometimes we think that, that it or that fraction is not a difference. But you know what? That can save you thousands and thousands of dollars. So let me go ahead and tell you a little bit more about this. So mortgage rates are on the rise this year. So last year compared to 2020, I saw rates as low as 1.75%, and now they're creeping up a little bit to the threes. So basically, but they're still incredibly low to compare to historic average. So like I discussed yesterday, comparing from the 70s, 80s, 90s, 2000s, and, just go forth, it's a huge change. So you're still saving money on this. Like I said, the wages, rates, you're getting bang for your buck. All right. So they're still incredibly low compared to the historic average. However, anytime there's a change in mortgage rate, it affects what you can afford to borrow when you're buying a home. So as Sam Catter, Chief Economist of Freddie Mac shares, since January, mortgage rates have increased 0.5 percentage point. So from historic low and home prices have risen, leaving potential home buyers with less purchasing power. So that means you're getting less for their money. So less purchasing power. So less house, a little bit more a higher rate. But don't panic. 2021 mortgage rates, it started by the beginning of the year from January 7th. It started at a 2.65. That was the average. Now it's up to a 3.17%. So when buying a home, it's important to determine a monthly budget so you can plan for and understand what you can afford. So this is really, really important for you, especially when you're looking to buy a house and your monthly payments, because that means a lot. So, however, when you need to stick to your budget, even a small increase in the mortgage rate can make a big difference. So I want to put an example, like when you buy a house, you get the taxes and all that. You see, oh no, these are the taxes this year. And then you get that little increase in the following year because taxes go up sometimes or all the time. Let's put it that way. So it's the same thing with rates, but rates, they stay. That's the rate that you're going to get. That's unless you refinance, unless you have a different type of rate. But I'm not going to get into that because I'm not a lender. I am a real estate agent. So that is not my job. So according to the National Association of Real Estate Realtors, today the median existing home price is $313,000. So let's put it this way. Using a simple number closer to the median price, here's an example. Let's say $300,000 of how a change in the mortgage rate impacts your monthly principal and interest payments in your home. So I'm gonna show you a graph. What is your purchasing power and what is the difference on that fraction? So here we have power. So you got the 4.25. You see what the difference is on a 300,000, and look at that. You see how the payments go down? So that is very important for you to know. And asking those questions for so 4.25% was 1,478, but this is probably not including, I don't know if it's not including the mortgage. I mean, the escrow, so insurance and taxes. So I'm not so sure. But that's basically, okay, so this is basically the payments and interest. So rounded to the nearest dollar amount. So if, for example, if you're getting ready to buy a home and you know your budget allows for a monthly payment of $1,200 to $1,250, every time the mortgage rate increases, the loan amount has to decrease. So that means if you have a house that you want to buy, okay, so your budget is $1,225, right? And at a 2.75%, you can get that $1,225 interest rate or payment for a $300,000 loan. But if you're looking at, hey, you know what? I want to buy a house. My budget is no more than $1,250. Then you know what? At a 3.75%, you can only afford $270,000. So that is really, really important. Okay, so this means you may have to look for lower price homes as mortgage rates goes up if you want to be able to maintain your budget. So in essence, it's ideal to close on a home loan when mortgage rates are low so you can afford to borrow more money. So that means if you buy a house and you have your monthly payments we're at 2.75%, an example, you want to buy a $300,000 house, of course you can afford it. But because of the rate, then you'll have to look at lesser priced homes. So that's really important. This gives you more purchasing power when you buy a home. Mark Fleming, chief economist at First American, explains monthly payments have remained manageable despite soaring home prices because of low mortgage rates. And that's really important. So in fact, monthly payments remain between the $1,250 to the $1,260 range that we saw in both fall 2018 and the spring 2019. But they are on track to hit that level this spring. So that means we're going to see a little bit of an increase in mortgages compared from 2018, 2019, now 2020, 21. We're in 2021. So although they remain low, mortgage rates have begun to increase and they're expected to rise further later in the year. So keep in mind, I mentioned this at the beginning of the year, that right now is the best time to buy a house. Yes, it is the best time to buy a house, but at the same time, we need to make sure that you guys are getting as much bang for your buck. So take advantage of this market today. And you know what? Just get pre. So in this case, affordability will test the market demand in the next few months ahead, and they will help slow the pace of the price growth, which is nice too, because the houses won't go up that much. But today's mortgage rates are still very low, but experts project that they will continue to rise modestly this year. As a result, every moment counts for home buyers who want to secure the lowest mortgage rates they can in order to be able to afford their home of their dreams. So thanks to low mortgage interest rates, this brings the housing market is in bloom for buyers. So this is a perfect scenario, perfect time to buy. We still have low mortgage interest rates, which is amazing. But this is not going to last long. So keep that in mind. So if you have any questions, any concerns, please feel free to contact me. I would love to help you purchase, see what your purchasing power is. And you know what? This is Cindy Presgraves with Cindy's Realty Group by EXP, and I look forward to talking to you soon. Have a wonderful day.